Hello, welcome to the European Open briefing for Friday, December 1st. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. The dollar had a bit of a setback yesterday after the US Senate postponed its vote on a tax plan to today. Analysts were hoping that the Senate would vote on it yesterday, but there's ongoing negotiations in order to make further amendments to the bill. The US dollar later resumed its rally, but has pulled back a little bit at the start of European trading today. The euro is doing fairly well. It's back above the $1.19 level. It's been lifted on reports that Merkel and the SPD party have started coalition talks. The pound is also having a strong week. It's broken above the $1.35 level as the UK and the EU get closer to resolving their differences on the Brexit divorce terms. The Kiwi, though, is struggling to recover from 1.5 week lows, but it has found some support from upbeat or relatively upbeat terms of trade data out of New Zealand today. Oil prices, though, are stuck in their recent range, even after OPEC and non-OPEC countries decided to extend the output deal by a further 9 months. This was pretty much in line with expectations, so market reaction was fairly muted to that announcement. But let's begin with the dollar. We can see dollar-yen continues to trend higher for much of the week. It's currently trading around 112.60 yen. The dollar index, though, we can see has drifted lower since yesterday. That's mainly due to a stronger euro and the pound. Dollar yen is currently at a 1.5 week high. Dollar index has slipped just below 92.90. Yesterday, the Senate made further progress on the tax legislation. It got a major boost after Republican Senator John McCain gave his backing to the bill, but there still appears to be some difficulties as some senators want to add a trigger so that if the tax plan doesn't generate enough growth and in turn enough revenue, then that would lead to automatic tax increases after a certain number of years. That's proving a major sticking point, so that's why the negotiations will continue today, and a vote on it is expected at some point today, but still we could still have another delay potentially to next week. There are some renewed political risks surrounding the US amid some reports suggesting that the White House is planning to replace the Secretary of State Rex Tillerson with CIA Director Mike Pompeo following the relationship between Rex Tillerson and Donald Trump deteriorating in recent months. But both the US stocks and Treasury yields continue to edge high. Yields have been boosted on the optimism about the tax plan, as well as on firming expectations of a December rate hike by the Fed. US stocks also being lifted by that tax optimism, as well as the improving outlook for the global economy. We saw the Dow Jones yesterday breaking about 24,000 for the very first time. The S&P 500 also closed at a record high. But even though we did see a bit of a recovery in tech stocks, the Nasdaq Composite didn't reach a record high yesterday. We had more Fed speakers coming up yesterday. Dallas Fed President Robert Kaplan and Cleveland Fed President Loretta Mester both supporting further rate hikes over the coming period. We also had some upbeat US data. Personal income in October rose by more than expected. Personal consumption was in line with expectations. The Fed's favored inflation gauge, the PCE price index, the core PCE price index, was unchanged at 1.4%. It would have been up from 1.3 to 1.4%, but we did see an upward revision to September's figure for 1.3 to 1.4%. And we also had a strong Chicago PMI and weekless jobless claims as well, all of which support a rate hike in December. The euro, we can see here, did reverse sharply high yesterday, climbing back above the 1.19 level towards November's 2-month high, 1.1960. We've had very strong Eurozone survey data in recent, over the past couple of weeks, reinforcing the view that the region's economy is gaining further momentum. And also on Merkel starting coalition talks with the SPD leader Martin Schulz yesterday. They will meet again later today. So there are hopes that they will reach some sort of a coalition deal and avoid a snap election in Germany. The pound is also doing well. We can see it's been rising all week. It's broken above the 1.35 level, hitting a fresh 2-month high. The UK and the EU appear to be getting closer to reaching a deal over the Brexit divorce terms. Theresa May, UK Prime Minister, will be meeting with European Commission President Jean-Claude Juncker on Monday, where they will hope to finalize their agreement, or at least agree that they've made sufficient progress, so that when it's time for the EU summit the following week, the chief negotiator Michel Barnier will recommend to EU leaders that the talks should move on to the trade phase and also the transition deal discussions as well. And apart from, we heard earlier in the week that UK has raised its offer of the Brexit bill, and now we're hearing that they're also appearing a deal on the issue with the Northern Ireland border with Republic of Ireland. So that's all of that has been boosting sterling, which is looking fairly bullish at the moment. But on the other hand, we've got the Australian and the New Zealand dollars, both of which are looking very much bearish at the moment. Yesterday we had some fairly upbeat Chinese and Australian data, which didn't give much of a lift to the Aussie. There was only a short-lived boost. But this morning the Aussie is heading higher at the start of European trading, climbing to around 0.7585 versus the greenback. We had the AIG manufacturing index in Australia rising sharply from 51.1 to 57.3, although we did have some disappointing Chinese data. The Caixin manufacturing PMI didn't match yesterday's official PMI. It missed expectations to drop to 50.8 in November. Likewise, the New Zealand dollar is struggling at 1.5-week lows, hitting a fresh low of 0.6815 earlier today. It has also turned higher at the start of European trading, but still remains within the current downtrend. We had terms of trade data out of New Zealand, which, although it showed exports fell by 1.9% in the third quarter, imports fell at a faster pace, and therefore the country's terms of trade rose to their strongest on record in the third quarter, but that's only provided minor support for the Kiwi at the moment. And finally, oil prices, we can see they're pretty much been range-bound this week. There were some concerns that OPEC and non-OPEC countries wouldn't reach a deal on extending the output deal, or they would announce the new deal would be at a reduced scale, either in terms of the size of the cuts or the duration of the new deal. But they went ahead and stuck to the current terms, extending it by 9 months till the end of 2018. There was also some concern that it would be conditional on having a review in June, but it appears that doesn't have any conditions attached, although there does seem to be broad agreement within OPEC and non-OPEC to review the current deal once again in June. So there's still that possibility that the deal might end before the end of 2018, but for now everything is pretty much in line with expectations. So we're seeing US crude fairly steady around $57.68 a barrel at the moment. And looking at today's economic calendar, we can see we had a whole batch of data out of Japan. We saw inflation edging higher from 0.7 to 0.8% in October. Household spending disappointed, though, falling by more than expected in October. We just had Eurozone final manufacturing PMIs. We saw a slight upward revision there. We're going to have the UK PMI for November, the first and only reading for the UK. And the main focus later will be Canadian employment and GDP data, as well as the ISM manufacturing PMI out of the US, plus a couple of Fed speakers due to speak later in the day. That's it from me. Thank you very much for watching and have a great day.